In this video, we're going to address the concept of stakeholders. Remember that stakeholders are individuals or groups who either affect the business or are affected by the actions of a business. All stakeholders have objectives, something they really want from their relationship with the business. In order to meet their objectives, stakeholders have questions that they want answered. Let's do demonstration question 1-2. In order to meet their objectives, stakeholders have questions they need answered. Match the following stakeholders with the question or questions stakeholders would most likely ask about a business given their objective or objectives. So we've got a list of stakeholders here. And then if we move down, we've got the questions. So what we have to do is in the space provided next to the stakeholder, we have to determine what is the most likely question that that stakeholder will ask. So let's go to the first stakeholder. We've got a tax advisor to a business. So question A is, what is the expected revenue from a new product? I don't think that's the first question a tax advisor would want answered. B is, are tax laws being followed? Well, a tax advisor would be interested in this because this stakeholder wants to ensure that all tax laws are being followed. That's because they want to make sure there's no chance that the business they work for would be charged with tax evasion. So I think it's B, but I'm going to go through the rest of the questions just in case. Will a business be able to pay for its purchase on time? I don't think that's a major concern. Does the business have enough cash to pay interest? No. Is the business following required accounting rules? No. So definitely B. Next is a marketing manager. We've already used B, but that doesn't mean it's off the table. We could still use it again. What is the expected revenue from a new product? Well, most likely the marketing manager would want to know that because they probably earn a higher wage or a bonus based on how much revenue is made from the sale of a new product. So it looks like this would be the marketing manager's main question. Let's just look at the other ones just in case. Will a business be able to pay for its purchases on time? I don't think that's the marketing manager. Does the business have enough cash to pay interest? No. Is the business following required accounting rules? No. So this, I think, is A. Now we've got the auditor in a large accounting firm. I don't think it's the revenue from a new product. Tax laws, no. Is the business able to pay their purchases? No. Does the business have enough cash to pay interest? No. Is the business following required accounting rules? Well, auditors are required to check if the businesses that they are auditing are following accounting rules appropriately. So this would definitely be a burning question for the auditor. Next, suppliers. Expected revenue from the sale of a new product, that could be a possibility, right? Suppliers might be concerned about a new product and whether it's selling, especially if they're providing the new product to the business. So that's a possibility. Tax laws, no. Will a business be able to pay for its purchases on time? Actually, that would be a big concern for a supplier because a supplier is selling goods and services to a business. They want to know that the business can pay them back. So actually, I think this would be a burning question for them. That's because in order to run their business, their clients need to pay them on time. The last one is the creditor or banker. So expected revenue from a new product, tax laws, no. Business able to pay for its purchases. Actually, that might be a concern of a creditor because a creditor would want to know if the company can pay their debts as they come due. Does the business have enough cash to pay interest? This probably would be even a more important question for the creditor. Banks only make profit if their customers pay interest on their loans. So probably this is their number one question, D. So you'll notice that stakeholders have objectives, and their objectives drive the questions they're going to ask about a business. This is an important concept to understand when we're involved in accounting. Thanks for watching.